If there are two words likely to strike fear into the hearts of investors, it's Italian banks. But Chris, our resident banking expert on Lex, is here to explain why things might have become rather more positive in the last few days. Chris?
Well, we've had news today that the Italian government has essentially gotten the finance industry round a table, a bit like this, except one imagines significantly bigger, and clubbed together. They've all clubbed together around about 5 billion euros in order to help some of the weaker banks who are having trouble raising capital at the moment. So the view is that if you can get them to raise the capital, that will strengthen the Italian banking system as a whole. But of course, what it indicates is that they cannot find the demand for their equity among ordinary investors.
Right, so let me get this straight. The Italian financial system is massively underwater. The Italian banks have, tens of billions of euros of bad debt. And now this whole financial system is going to get together the money. Isn't this rather like a drowning swimmer trying to drag himself out of the water by his own swimming trunks? I mean, how is this going to help?
Arguably, you're right, but it is arguably better than letting the swimmer drown, at least at this point in time. What the optimists hope is that this is a step towards recognizing the scale but also complexity of the problems within the Italian banking system, which is not just the lack of capital, equity in some banks, but also this is a step towards actually creating some sort of vehicle to actually deal with the bad loans. Now, non-performing loans total about 360 billion in Italy.
And we've got, 5 billion here? So I understand your view in the note is okay, but not quite enough. I mean, what do you think they do need?
It's a start, and it's a belated start at that. These issues have been known about for a long time. Out of the 360 billion of non-performing loans, you've got about an estimated, Bernstein estimates, according to their research, about 56 billion is the so-called sofferenze, the very worst of the bad loans.
So that's the amount that needs to be really dealt with urgently?
That's the amount that needs to be dealt with urgently. Now, the good point is that the 56 billion is the book value of those loans. The estimated market price is only about 15 billion lower.
So we're getting quite close to the really rotten core of the bad debt problem.
We're getting closer and closer. So the idea is, hypothetically, you could take a kind of similar equity slice, say 5 billion, and then you could invite debt investors and lever that up and multiply it, have another 10 billion, say, of senior notes, perhaps with some kind of state guarantee, and another 5 billion of junior debt, and suddenly you've got something much more compelling.
It could really make a difference. And so can I put you on the spot here? I mean, Italian banks, as I said at the outset, scary words for investors, were arguably the most difficult sector in the whole of the European banking universe. Are you saying that if we get this right, they could end up being a good buy?
Listen, Italian banks trade at an enormous discount on average to their European peers, at less than half their book value. There are two main reasons for that. One is the lack of profitability. It's an overbanked market, and it's not very profitable. And then secondly is these questions about the bad loans that sit on their balance sheet, which they haven't been able to hive off. If you can deal with at least the worst of the bad loans, then looking at the valuations as they are, very low, very discounted, then you can start to see a more positive narrative for Italian banks going forward.
Chris,
so yes, that valuation gap should close.
Amazing if that's true. Good luck, Chris. Thanks.